Hey everybody, I hope everyone is doing well and had a good day. In today's video, we're going to review the E-mini S&P 500 5-minute chart for Monday, June 15th, 2026. Here's the daily chart of the E-mini, and we have, if you just imagine, as we go into the day, it's opening around here. So we have a pretty big gap up, a relatively big gap up. When you just look at this chart, most of the bars are not gapping this far above or below the prior bar. Tight bull channel, getting a trend line break, but then 3 pushes down, strong reversal bar. Bulls get a decent entry bar, probably buyers below this bar, and then we have a gap up. The problem with the gap up that I saw, if we think about traders, if we think about trapped traders, we see the tight bull channel and then the trend line break. You know that traders who bought back here around the all-time high, they're trapped by this reversal attempt by the bears. So when the market comes back near this area where the bulls who bought up here are now holding a losing position, it's going to limit the upside because the traders who bought are trapped and disappointed by this reversal. So as the market continues higher, testing these prices to the left, it's probably going to find resistance and sellers somewhere in this area above, high in the trading range. If the market does break out to an all-time high, probably sellers there. And as far as the downside, right now the bulls have decent momentum with this bull breakout, and I'll talk about the Globex chart before we go down to the 5-minute chart so we can see that momentum. So I'll show the 5-minute chart. Here's the 15-minute Globex chart. Sunday afternoon, market opens with a big gap up, and we have this spike in channel trend. Let's go back to the information we have going into the day. So here's what we have going into 9:30 Eastern time. After that big gap up, big bull bar here, spike and tight channel, which basically evolved into a trading range. You could say it's still a bull channel getting higher highs and higher lows, even though the market fell below this higher low. This was not a major higher low. It did not break out strongly to a new high in trend. So this was the last major higher low. The market stayed above it, ended up getting a double bottom bull flag, break out to a new high. So like I said, technically this is still a bull trend with higher lows and higher highs. But it's also sideways enough that it might behave like a trading range. And my thoughts about that are, then when we see the first bar on the 15-minute chart for today, it's a big bull breakout bar, breaking out far above all the bars to the left, and this might be resetting the market cycle to some degree. So with the 5-minute chart, look at the RTH chart. Very big gap up. With follow-through buying on the open. Bar 1, bull breakout bar, closing near its high, probably going to get a second leg, especially with the momentum I was talking about from the gap up going into the day. You can expect a second leg up. And for the first reversal attempt to be minor, bar 2, overlapping bar 1, big tail on bar 2, not an ideal follow-through bar, but it's also a bad stop order sell. I said a second leg up is likely, and the first reversal attempt will probably fail, so it's probably buyers below bar 2. 3, triggering the stop order, entry below bar 2. The bad stop order sell, limit order bull buy below bar 2. And then 3, a trading range bar, probably buyers below 3. There might be sellers above 3, but I am expecting 1 and 2 to get a second leg up. 4, bull breakout bar, closing near its high. Good for the bulls, 2 legs up in a tight bull channel, probably going at least a little bit higher. And then a reversal bar on 5, small reversal bar, good risk reward, low probability sell below bar 5. The bulls have decent momentum. It's a tight bull channel, just a minor reversal, shallow pullback on bar 3. On a higher time frame chart, like say the 10-minute chart, this is just consecutive bull trend bars. So this entire breakout from bar, or the tight channel from bar 1 to bar 5, will probably get a second leg up. Reversal and bigger follow-through bar on 6. That's good for the bears. It'll probably get a second leg down because there are trapped traders. The traders who bought the close of bar 4 may be disappointed with 5, but also reasonable to stay long. It's a low probability sell below bar 5, but then you get bar 6 and you're disappointed as a bull if you bought anywhere up here, and that may create enough resistance that bar 6 leads to a second leg down. So 7 is testing that area, the close of bar 4, that area where the bulls who bought are trapped and disappointed. So there might be more sellers on the close and above bar 7. It's also, this would be 1 pullback, 2 pullback, leg 3 for the bulls. So probably more sellers above bar 7, as 6 may get a second leg down. Then as far as the downside, I said bar 2 was a bad stop order sell. And the traders who did sell below bar 2, or if they did not buy below bar 2, they are trapped. Traders who sold below bar 2 trapped into a losing position. And if you did not buy below bar 2, you missed a winning position, a winning trade. And that creates an area of support. So the market's pulling back here. And it looks like reversal and follow through, pulled back, is getting a second leg down. But the downside might be limited based on the stop order triggering and then leading to a strong bull breakout. So bar 8, the market is channeling down on a smaller time frame. It's probably a broad bear channel. These bars are overlapping, but it's going down with lower lows and lower highs. It might be a stairs pattern. Buyers below 6, they can buy, scale in, make money. If you buy below bar 7, you can probably make money. Buy below bar 8, scale in, make money. Bar 9, testing that area that is expected to be support, failing to break out below. Still a bear micro channel. The first attempt at trend resumption for the bulls might fail, but ultimately, if we zoom out, again, just imagine a 10 or 15-minute chart. This is a pretty decent bull breakout on the open, bars 1 through 5, and this might be a minor reversal before leading to a second leg up. Plus the gap up. Keep in mind the big gap up is also a big bull breakout, trapping traders below, and that creates support and a second leg most of the time. For the bulls, it's an implied high 2, so tight channel, high 1 pullback, second leg down. Now it's a high 2 above bar 10 with a decent signal bar, reasonable stop order long entry. And then for the bears, if you're short for any reason, probably okay to exit shorts above 10. Now for the bears, you can count 3 pushes. 1, implied pullback. 2, pullback. 3 legs down on bar 11, probably buyers below 11. 12, bull breakout bar, but this looks like a tight trading range. Limit order market, sellers up here, buyers down here. Might be better to wait for a breakout. And this tight trading range went on for a few bars here, so the limit order market continuing. Bull breakout on 16, but big upper tail. Some traders, you can look at it this way. It's a triangle. The ranges has been getting squeezed with lower highs and higher lows, and eventually the market's not going to stay in this tight range. It's going to break out of it, and it's breaking out of the bear trend line on 16 and then getting a follow-through bar 17. It's also a bull micro channel from 13 through 17, so that's good for the bulls. Bull breakout, pullback, getting a second leg. And for the bears, maybe you can sell or look to sell as a double top, bull trend line break, 3-legged retest of the highs. So let's see if the bears can get a decent sell signal bar. And then 18, another bull bar added to this micro channel, especially 16 through 18 is pretty strong. Not as strong as it could be with the big tail on 16 and the overlapping bars, but these bars are fairly uniform in size. And it's in the direction of the major trend. The tight channel, minor reversal, another tight channel. The bears are hoping this becomes a higher high major trend reversal, but the selling pressure through here has been pretty weak. There's really no big consecutive bear trend bars. Every bear bar is getting followed by a weaker bar. Bar 6 was a decent bar, but not especially big, and it did not get followed through. Same with bar 8, but fairly big tails, and then followed by a weaker bar closing above its midpoint. And especially through here, the selling pressure not strong. So 18, there's probably more buyers below. And then another bar added to the micro channel. So a strong micro channel, second leg up likely. The odds are the first reversal attempt will fail. You can buy below any bar, depending on the minor reversal and second leg. And this is so strong with the price control and time control. It's fairly controlled. Like I said, the bars are uniform in size. It's lasting 4 bars here. And there's a sense of urgency. The traders trying to buy below bars since bar 13 have not been getting filled. So traders have to buy the market or buy very shallow pullbacks along the way here. So traders can buy for any reason, buy below any bar, use the wide stop, and expect probably a second leg and maybe a measured move. So still going sideways, but after this micro channel, probably buyers below 22. You can see the stop orders below bars are still not triggering. So the micro channel continues. We finally get a sell signal bar 25, the first decent sell signal bar since bar 6. And in this entire tight bull channel, so it's probably buyers below bar 25 or on the close of 25. The bar itself, the signal bar, looks strong, but the context is bad. The bulls have been controlling price and time for a lot of bars. So you have to ask yourself, even if you bought above bar 24 or bought the close 24, the question is, how disappointed are those traders who bought 24? Are they going to panic out below 25? Or can they buy 25? Because this might be a small pullback trend. And when you get a sell signal and a small pullback bull trend, they usually fail to go very far, and they become continuation patterns. These reversal setups become continuation patterns. And the market continues up here, breaking out to a new high, another micro channel. Not sure if we pulled back technically. It looks like these lows on my chart, 24, 25, they have the same low. So technically it's still a micro channel since bar 13. That's very strong for the bulls. So breaking out strongly to a new high, probably okay to buy the close or buy a pullback 28, a little bit of a bigger bar and breaking out to a new high. So it might hesitate first, but it's still always in long. Market paused and then continued higher. Even 28, the bull breakout after pausing got a second leg, measured move target reached. Small inside bar, probably buyers below. This is a very strong trend. And again, the selling pressure is not strong enough to be looking to sell. As far as exiting longs, probably okay to exit below a second entry short, but I don't think traders have to get out below 32. 33, now it's a 3-bar micro channel. You have traders who bought the high tick, bought the close 31. Anyone who bought up here may be disappointed with 33. Although this is still not all that strong for the bears. But another bar added to the micro channel. At this point, there's probably sellers above 34. Say traders who bought the close, disappointed by the pullback. Maybe they exit longs and look to buy again after maybe a second leg down. And then bears can sell above bars for a scalp. So 35 testing that resistance, probably going to go more sideways here. Now we have a second entry short below bar 37, a double top. It's still probably a minor reversal. There's not enough selling pressure to expect this to be a major reversal. But for the bulls, I think it's reasonable to exit below 37 and then maybe look to buy lower. And bears, maybe they can sell for a scalp. And then a good entry bar 38, good breakout and follow through for the bears. We might pause here as we're testing support to the left. But I do think the traders now who, it's a 3-bar micro channel to 36 in the strong bull trend. Anyone who bought 36, disappointed 37, 38, that creates resistance back up here and increases the probability that 37, 38 gets a second leg down. So before you look to buy, maybe look for a second entry buy, because the bears are probably going to get a second leg down here. 3-bar micro channel, so the bears adding a bar, which is time to their breakout here. So they did not increase the size of the breakout. They did not control more price, but they were able to control the time and get a reversal bar closing below its midpoint. And that was a 3-bar micro channel, probably sellers above 39. And then a 4-bar micro channel, so another bar added to the breakout, second leg down likely for the bears. So there might be sellers above 40 and 39 if we pull back. And there's a pullback here. It's actually a 2-legged pullback from basically it's the low of 40 to the high of 41, and then another pullback and rally on 42. And then 43. The bears get their second leg down, and now it's 3 legs down to bar 43. And it's the first test of the moving average all day. So the market bounced here on 43, which is expected when you have 3 legs down against a strong trend. But it looks like the market's evolving into a trading range at this point. And then for day structure at this point, maybe it's a trending trading range day with a lower range down here, maybe an upper trading range here. Another bear breakout bar, but a big tail below the bar. Maybe it's a 4th push or a 3rd leg near the channel line, so probably buyers below 44. Remember, you always want to be thinking about, are there more traders buying or selling above and below the prior bar? And there's a late push or a late leg in a channel against a strong trend, and it's testing support. It's really not ideal to be betting on the bear breakout of the bear channel line. Market's probably going to correct and test the trend line, which is possibly up here. And it does that on the next bar, 45. 45, the bulls can call it a second entry long. Might be okay to buy 45, but a lot of overlap with the prior bar, forcing you to buy in the middle of the trading range. So it's really not ideal for buying here, but because we had the 3 legs with 4 pushes down to support, we may get a couple of legs up, but I do expect resistance somewhere up here between these lines. I said back here, traders who bought the close 36, trapped by 37, 38, they're disappointed. That creates resistance up here. And then plus the breakout point. As we broke out 38, 39 tested that breakout point, a low of 36 and 37. So anywhere between these 2 lines is probably resistance in a trading range. And we can see the market testing that first level of resistance and pulling back, but pretty decent micro channel, 44 through 46. Probably buyers below 46. I'm expecting a second leg, but the upside might be limited. A couple more bars added to the micro channel for the bulls. The structure on the lower time frame is a spike in channel, and this is a channel with 46, 47, 48. That's 3 pushes up near resistance in a trading range. So it is a bull micro channel. There's probably buyers below 48 and a second leg, at least a second leg attempt. The worst case for the bulls here is the market hesitates. It's probably not going to go straight down, but we are back near resistance, testing resistance in this trading range. And then if we just mentally zoom out again to maybe the 15-minute chart and just imagine what 37 through 44 looks like, it's a pretty tight bear channel on the 5-minute, and it's a breakout on the higher time frame, which means it's a bear breakout, getting a deep pullback, but it still might get a delayed second leg after that deep pullback. You see that happen all the time in trading ranges as the market tests back to resistance. Now 49, a bear breakout bar, but a trading range bar. As far as buying 49, again, bull micro channel might get a second leg, but do I think it's wise to buy above 49? Not really, because it's a trading range bar and it's at the top of an overall bigger trading range. So there might be more sellers above 49. Not an ideal bar to buy above. And then as far as buying the close, still not ideal. Maybe the bulls get that second leg attempt, But because we just tested resistance and found a reversal bar, sellers up here, 48, and then another bear bar, 49, the bears, like I said, there might be sellers above 49, and the bears may get a second leg down. Inside bar, 50, is basically the minimum hesitation for the bull micro channel. Hesitate for 1 bar, but now it's continuing lower, a 4-bar micro channel, probably sellers above 51. Same with 52, micro channel, sellers above, and the micro channel continued here. So this is another kind of sense of urgency bear micro channel. If you're trying to sell above bars with limit orders, you're not getting filled. You're forced to sell the close or sell very shallow pullbacks. So a pretty strong micro channel down to 54. Decent momentum, price control, and time control, which is good for the bears. What's not ideal for the bears is it might be approaching a bear channel line. And then when I look back to the left, these bars, these overlapping bars for 4 or 5 bars here catch my attention. The market was in a tight trading range for these 3 or 4 or 5 bars, and then it got a strong breakout far above it. Any trader selling above bars here, especially if you think about the smaller time frames in theory, traders could have sold above bar 20 and made money, sell above 21, made money. And then if you sold above 22, you were finally trapped. Maybe you broke even on the entire trade. But eventually the bulls got the breakout, which trapped traders down here, and that creates support. $55, a little bit of a bigger bear bar, and then the dueling lines support, bear channel here, and then tight trading range support back here. Expecting a second leg down because the micro channel is strong for the bears, but selling in this location just not ideal. The expectation is a minor reversal, a pullback first, and then a second leg down. And we get that minor reversal, 3 or 4 bar micro channel, but it looks like a minor reversal for the bulls, not great for buying. Might be enough for buyers below 58 and a small second leg attempt, but keep in mind this micro channel down to 55 still needs a second leg down. So you have to ask yourself if buying here, the counter trend scalp long is really worth it, or if it's better to look for the short because a second leg down is likely. Another bear micro channel down to bar 60. There might be buyers below 56, but again, the momentum down to 55 is so strong that this probably is not going to reverse this micro channel. And then it's possible that the bears even get a measure move down here. Reversal bar 61. So we had a first reversal attempt above when bar 57 broke out above 56, and then a second reversal signal bar 61. The problem with bar 61 being at a better stop entry price for the bulls than 56, if you think about it, a second entry setup means there's more bars and more information added on the chart. You had less information here than you have here. You have all these extra bars of information, but back here, the stop order buy, you're taking a chance. You're taking a low probability trade if you buy above 56 because the bear momentum is strong. It needs a second leg down. And then you can say, maybe this is the second leg down. Here's a second entry long, 61, but why am I getting a better price? I had to pay up here buying above 56, and I'm paying less to buy above 61, which is a little suspicious. It's also a tight bear channel, and 61 is a doji bar. It's really not a good buy signal bar, so there might be sellers above 61. The market may be channeling down. Remember the market cycle, spike, pullback, channel. Decent entry bar for the bull breakout, for the bull second reversal on 61, bar 62. However, location, not good. So the signal bar itself looks strong, but it's testing the moving average resistance. It's testing this area where the bull micro channel started to pull back, reverse down. Any traders who bought up here, trapped by the bear breakout, they're using the retest over here to exit longs. And then 63, you can see 62 did not get a good follow-through bar. It's a doji bar, 63. It's still within this range. Another micro channel, but not ideal for buying. It might be a low 2 for the bears. Bear breakout, low 1, low 2. Because it's a micro channel, there might be buyers below 63 and it might hesitate, kind of like back here. I talked about that. But again, because of this momentum for the bears, this looks like a minor reversal. It might be a tight trading range, in which case it's a limit order market and traders are selling up here and buying down here. Otherwise, it's a spike in channel for the bears and it's going lower, down and testing down below 61. Another bar added to the bull micro channel, so maybe buyers below 64, but not the best place to be buying, like I talked about. 65, probably sellers above 65. And now 66, it's a bear micro channel, so again, might be a bear breakout, low 1, low 2. This might be trend resumption, low 2 short for the bears. 66, probably okay to sell and sell above, expecting lower prices. Again, we might get down to the 61 low. I also talked about that the bears might get a measure move down based on this bear flag. So we can keep that measure move target in mind. Another bar added to the micro channel, good for the bears, probably sell the close. First reversal after this micro channel probably will be minor. We are bouncing at that support that I drew here once again. So some traders might buy, but after the micro channel, I think a second entry long is better, because usually after a micro channel, market pulls back, gets a new leg or new low, a second leg, and then there might be a reversal attempt. So 69, good looking bull bar, but might be trapping traders into buying too high with this momentum. It's a bear breakout, pullback, moving average resistance, and then maybe a second leg down. 70 went higher, but back to the resistance top of this tight trading range here. So traders are buying low and selling high, and the market's oscillating between these two areas of support and resistance. Bear breakout 71, the bear micro channel here, pulled back. It's getting its second leg, pretty decent momentum on the reversal follow through 70, 71. Might be better to wait for a second entry long. A couple magnets below, 61 low, and that measured move target down here. 72, another strong breakout bar. That's good for the bears, but it's really difficult, I think, to sell here with the bear channel argument in the late leg. This might be a good area to look to take profits rather than sell, but as far as buying, I would not. Micro channel, bear bars closing on their low, probably going to get a second leg. Better to wait for a second entry long. Hesitating here, 73, 74 on that bear channel line. So it looks like the bears, they're not selling aggressively here, they're taking profits, but do the bulls have a great argument for buying? Not really. Another micro channel with a weak signal bar. It's probably sellers above 74. And then 75 triggers that weak stop order buy, and then we get a big breakout bar, 76. 76 creates support below the market because I said 74, not a very good stop order buy. Structurally, it might be okay, but it's a low probability trade with the great risk reward. If you buy above 74, you're risking the small signal bar to make 2 or 3 times your risk. And then the bear momentum is strong. It's probably going to pull back and get a second leg. The pullback was stronger than the bears wanted, but it's testing the moving average resistance, the breakout point, bar 70 low resistance. So it's a bear breakout, deep pullback, but still the bears will probably get a second leg. But now because of the bull breakout, there's trap traders down here. So the low of 76, the new low, bar 74, these areas become support. And then 76 or 77, a big bear breakout bar, but testing those support areas, breaking out to a new low. But stairs pattern, let me just back up, talk about the stairs pattern here. Market's channeling down lower. The traders who, gosh, let me clean up the chart. Market cycle, bear, breakout, pullback. Pullback is the start of the channel. Traders start to buy back shorts as we break out to a new low. Any trader buying at the new low, they're making money. If you buy below 61, you're probably going to make money. Market finally gets there. Traders can buy, scale in, they make money. Stairs pattern continuing. So buy below here, make money. Buy below here, make money. If you buy below here, probably going to make money. Big breakout bar, 77. But again, a late leg at support, the bear channel line, and it's a stairs pattern. Traders have been buying below swing lows and making money. So probably buyers down here, and the market may reverse back up. And it did in a big way on bar 78, going back up to test the bear trend line up here. But now probably sellers up here at the channel line, or the bear trend line, also 78, big breakout bar. Big bar means big risk. If you buy 78, stop down here. Sometimes your risk is all the way up here. Low probability buy, but also very late in the day. You see the market, the bulls failed to get follow through here, but really not enough time in the day to do anything with that bar, to fade it or to take it. All right, that's going to be it for today's end of day review. Thanks everybody for watching, and for more price action fundamentals and how to trade price action, please visit the Brooks Trading course, which you can find through the link in the description of this video. All right, thanks again everybody for watching, and I hope everybody has a good night.